Assalamualaikum friends and welcome back in my channel. Now I want to tell you about finance marketing 101, understanding the ins and outs. Consumer finance is an extremely competitive space. Banks, lenders, and credit card providers are battling against one another to win over new and existing customers with tailored reward incentives, flexible spending limits, low APR, etc. In order to succeed, financial institutions turn to data-driven marketing tactics to get in front of consumers and influence their behavior in engaging and innovative ways. Like any other industry, marketing is in finance comes with its own set of unique considerations and requirements. By understanding these intricacies, marketers are able to successfully win share of wallet from competitors and build lifelong loyal relationships with consumers, remaining compliant yet effective. Aside from the universal regulations across all digital marketing, from recent GDPR and CCPA laws to the eventual 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 deprecation of third party cookies, finance marketers face their own unique set of regulations and standards that they need to abide by. For example, the Truth in Saving Act (TISA) requires banks to be transparent with consumers regarding certain information when promoting checking and savings accounts. Essentially, TISA protects consumers from misleading marketing content and holds the bank accountable for how they talk about the account services that they offer. Other regulations like UDAAP, Unfair, Deceptive, and Abusive Act of Practice protect consumers against harmful or misleading information. For credit card providers, they need to abide by Regulation Z, part of the Truth in Lending Act, requiring them to disclose certain terms and conditions in their marketing collateral collateral. As for banks, must also have a member FDIC disclosure in each advertisement. Credit unions, which are insured by the National Credit Union Administration, also require ad copy to include federally insured by NCUA. These are just a few of the many different disclosure disclosures and guidelines that finance marketers are responsible for. In the end, these regulations are meant to protect the consumer and provide them with the most honest, transparent, and experience possible. Aside from the legal ramifications of failing to remain complaints, advertisers who fall short of compliance run the risk of losing trust with their consumer base, a very difficult challenge to overcome. Reaching customers, new and old, across all touch points. Financial institutions have different marketing objectives than other industries like retail or CPG. Success in the finance industry is dependent upon the ability to build and grow long-term relationships with consumers as opposed to one and done transactions. Converting a new sale in this case is just the start of the overall relationship between a bank or credit union and the consumer. Understanding how to leverage marketing channels to reach consumers at every touch point and through every phase of that long term relationship is crucial for success. By investing in marketing strategies that fuel the upper and lower sales funnel, finance marketers can establish and maintain positive relationship with customers, not only getting them in the door to apply for a credit card or open a saving account, but also help maintain customer satisfaction and bring new opportunities for expanding that relationship. To do this, marketers need to invest in an omni-channel strategy. Consumers are active across several different channels and platforms, and it's important to get in front of them at every step, from social to display to TV and OTT. This ensures that our brand is top of mind when a consumer does decide to switch banks or get a new credit card. I hope you understand my video and like my video. Please share it. Thank you so much. Okay, take care. Allah Hafiz.